Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. Very good morning. I'm Kelvin here. Today will be the Thursday, the 28th of August 2025. So, as usual, let's have a quick look at the disclaimer first before we kickstart our daily dose for today. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we jump straight into those intraday technical outlook, let's have a recap what has taken shape yesterday and as well as in today's early Asia session before the start of our daily dose in terms of their relevant impact on those intraday broad-based cross assets movement. So yesterday, before the release of NVIDIA, so NVIDIA results was a key we call it important impact, or I would say that it's a important feedback loop to the major US stock indices. So let I explain to you all why over here. So let me share with you what happened to the price action of the SPX first before the release of the NVIDIA results at the early Asia session today, which is 4 a.m. Singapore time. So all the major four indices close in the green. The major US stock indices close in the green. So the SPX is up by 0.24%, the Nasdaq up by 0.17%, the Dow Jones Industrial Average up by 0.32%, and the Russell 2000 is up by 0.64%. So then thereafter, at 4 a.m., we see the release of NVIDIA results. So NVIDIA, what we could see over here is the most important is how the price react after the results. All right. So sometimes the results are not that great, but price also react positively due to guidance and due to potential share buyback. So we need to look at in aggregate what is the price action is telling us on NVIDIA. So let's look at what NVIDIA price, what's NVIDIA on the surface the price action look like first before I dive into the technical outlook of NVIDIA. Right, so at AVDA, let me touch it, AVDA stock price or share price. All right. Okay, so you could see on the screen here. Let me expand so that you guys could have a better view of the chart. Yeah, hopefully this is large enough. All right, good. So what you could see over here is that it traded sideways in a very tight range. So at the normal cash trading session yesterday, it was down negative 17 cents, 0.17 cents. So in percentage term, it's only almost unchanged, negative 0.09%. All right. So what we could see is that just trading a very tight sideways range. Then upon that, there was this release of the results over here. So those price action that is in gray is the after hours price action. That means after 4 a.m. Singapore time. So right after 4 a.m. Singapore time, there was a release of the NVIDIA result. Then initially we see a pop up in the price. Okay, so close at 181.60. It pop up to 182.41. Then thereafter the price just tumbled a pump. Close they tumbled. Then thereafter it just traded up marginally and ended the after hours by down negative 3%. So I would say that yes, it came down, but the way it's not like double digit or 6 to 7 double digit fall over here. And in fact over here is that later I'll share with you the price action chart of NVIDIA. The fall itself on the after hours managed to find support at some key technical element, which is overall stating that there could be still potential catalyst for NVIDIA price action from a technical perspective to continue its medium-term uptrend. So later I'll explain what is that first. So now let's go to the NVIDIA results. Okay, so NVIDIA managed to beat expectation. All right, they beat expectation. Okay, give me a minute now. Where is it? Yes. Okay, let me expand my screen. So the overall results, right, over here, they beat expectation. Okay, so let me go down. Where was it? Yeah. Okay, so NVIDIA reported adjusted earnings per share. So adjusted is after those tax stuff of $1.05 with a revenue of 6.7 billion. All right, so analysts were actually expecting an adjusted EPS of 1.01 per share and revenue of 46.2 billion. So both of them managed to beat expectations slightly over here. And also give me a minute. So in terms of year-on-year growth, it also increased. So because the previous quarter a year ago was at 0.68 less than a dollar, so now it went up to more. And also previously a year ago in the same quarter, a year ago, Q2 last year was 30 billion. Now it increased to 46.7 billion. So on the year-on-year increase, it still went up positive. And in terms of forward guidance, NVIDIA projected Q3 revenue, this forward guidance, because now Q3 hasn't really ended yet. So in Q3, they projected at 54 billion plus or minus 2%, and market expecting were at 53.4%. So forward guidance is also slightly higher than what market is expecting over here. And most importantly, the NVIDIA management say that the latest forward guidance projection does not include this H20 sales. So H20 sales is rather lower tier of the GPU. So the higher tier is Blackwell, where those guys who wants to train their AI model, like Alphabet, we talk about Meta, which is the parent company of Facebook. They're actually running this AI business-driven model, and in order to run their model, they actually purchase the top-tier GPU chips from NVIDIA. So that is actually Blackwell. They call it the Blackwell. So the H2 H20 is the lower tier one, and those lower tier are being shipped to China over here. So at this moment in time, the NVIDIA management yesterday didn't provide, saying that the Q3 revenue projection includes, they does not include H20 sales over here. And what's important over here is that they approve additional 60 billion, which is quite huge, 60 billion worth of share buybacks, which is also a positive catalyst for the stock. So why did the stocks tumble to a max drawdown on -5% and ended the after hour session with -3%? Is because of the data center sales. All right, so data center revenue is where those AI, we call it AI GPU chips, the processing chips, where the customer of NVIDIA purchase to run their AI-driven business operation or business model. So they cluster it segment as what I call data center segment. So this data center revenue, in a way, is very linked to this ongoing AI productivity bullish team play that market expecting, hoping to have be a very kind of a next frontier of revolutionary growth, and NVIDIA is the fourth leading in this revolutionary AI growth that potentially could drive up productivity tremendously. So that is the advocate of AI, those advocates. So this data center revenue, if you look at this data center, it's actually increasing every quarter. So this time around, the sell-side analysts actually forecasted data center segment revenue to be at 41.3 billion, but it came in at 41.1 billion. All right, so I think that is not that far off over here. So because of this slight miss by the actual Q2 data center segment revenue, causes this negative feedback loop in the after hour share price of NVIDIA. And we know that NVIDIA is a highest or biggest market cap component stock in the Nasdaq 100 and the S&P. So that has a negative knock-on effect on these two major US stock indices. So after the close of the US session, the only markets that are trading to be linked to the S&P 500 index and the Nasdaq 100 index will be the E-mini futures. All right, this E-mini futures on the S&P 500 and the Nasdaq 100 is traded almost like a 23-hour instrument. In Asia time, they also have their trading session ongoing as well. So this E-mini futures right now is down by negative 0.12% over here. So not that so-called sell off. And what you see immediately that after the results of NVIDIA, it came down, and right after the Asia session goes underway, that means more liquidity start to come in. Once Japan and Hong Kong, Singapore open, we see the E-mini futures shaping that mini V-shaped rebound as we are speaking right now. Very similar to the Nasdaq 100 E-mini futures as well. There's this mini V-shaped rebound that is unfolding. So not too bad. So overall, yes, despite that negative 3% sell off in the after hours of NVIDIA share, given that NVIDIA is the biggest market cap stock in S&P 500 and the Nasdaq 100, but however, its derivative that is trading right now as we are speaking, the S&P E-mini futures and the Nasdaq 100 E-mini futures are still doing a what I call a healthy corrective pullback rather than a drastic intraday sell off. All right, and if you go to the share price of NVIDIA immediately, let me share the share price of NVIDIA by looking at the daily chart. So on the daily chart of NVIDIA, it continues to trade in this broad-based medium-term uptrend phase that is still holding within this medium-term ascending channel from the low of April 2025. And price action, yesterday, it was above the 20-day moving average, but still can't break above this stubborn intermediate resistance at 182.20. So this 182.20 has been a resistant level very stubbornly since late July this year. All right, so that's this stubborn resistance. Yesterday it tested, come break, and it did that minor pullback before the release of the NVIDIA results. So this is the daily chart. So in order to see the after hours chart on TradingView, you just got to switch it down to the lower time frame. So let me switch it down to the hourly time frame so that you guys could see the after hours trading price action. Yeah, so this is the after hours trading price action. So those are being highlighted in this what I call it, light blue purplish line over here. So what's interesting over here is that this hourly chart here, okay, this plunge over here. So this plunge managed to store right exactly at this turquoise green line. So what is the turquoise green line over here? If you go back to the daily chart, is in fact the lower boundary of this medium-term ascending channel that is still in place since 7th of April. So i.e. there is some form of consolidation saying that potentially bargain hunter starts to actually look at this ascending channel support very, very closely, where initially there was an intraday deep sell-off, and this sell-off managed to find some kind of bargain hunting taking into play at that between that 4 a.m. to 5 a.m. Singapore hour mark this morning. So I would say that the price action after the release of NVIDIA earnings result, yes, on the surface it may be looking quite negative, not that rosy because it actually didn't rise but fall. But once it fall to an important technical element, and that technical element, there is some form of support that is being formed, which is the lower boundary of this minor medium-term ascending channel support, and right above this 50-day moving average over here as well, this dark green line here, which is the 50-day moving average. All right, so net I would say that the price action of NVIDIA exposed earnings result, yes, even though on the headline number is down by negative 3%, to be precise is negative 3.14% by the time it closed at the after hours trading, but prices still managed to find some support at two key elements on the NVIDIA chart, which is still indication that the medium-term uptrend phase of NVIDIA is still bullish, is still intact, which means that i.e. We may not see a prelude of a medium-term downtrend phase in the major US stock indices. All right, now very quickly now let us jump to the FX market. So over the FX market, yesterday the dollar weakness finally came back. All right, so after 3 days of consolidation, exposed Fed Chair dovish speech on the annual Jackson Hole Symposium on last Friday. So what do I mean by this? If we were to look at the 5-day rolling performance chart of the dollar plotted against the major currency, which I like to use to give me an overview of the performance of the dollar, taking into account is being plotted against those major trading currencies, including the Sing dollar and the Chinese yuan. So what we could see this 5-day rolling performance as of now, we are speaking 28th of August. So still recall that this previous plunge over here of the dollar against the other currency is due to Fed Chair dovish speech over at last Friday Jackson Hole Symposium. After that plunge from Monday to Wednesday, it just traded sideways, and finally yesterday it did that intraday sell-off, and in fact some of the currency are now very close to the dollar versus the other major currency pair is very close to the low that is being seen on last Friday, not this Friday, and the dollar Aussie is the weakest. So now that means the Aussie is the strongest against the dollar as we are speaking, given the dollar has depreciated against the Aussie by negative 1.5% as we are speaking right now over here. So what we could see over here is that, like I mentioned to you guys on my intraday technical outlook on the last 3 days, stating that whatever bounce on the dollar is more corrective in nature, which indeed it turned out as expected before the dollar weakness starts to resurface yesterday at the middle part of the US session. So what causes this dollar weakness to get more pronounced yesterday is the Federal Reserve officials speech. So one of them actually mentioned that next up and coming September meeting is live, and he also mentioned that every policy meeting is live for rates. So based on this statement, is rather dovish. So Federal Reserve Bank, Fed Reserve Bank of New York President John Williams over here. So he said that the U.S. Central Bank meeting next month will be a live one, hinting at the possibility of an interest rate move. All right. So and he also mentioned that the current level of rates is modestly restrictive, which means the Fed could reduce interest rate and still be somehow restrictive going forward. So what he means that over here is that the current rates is still rather high, and the Fed could actually do more to reduce the rates when warranted, given the fact that Fed chair mentioned in last Friday that he's pretty much now concerned about the labor market weakness or softness based on the latest NFP data print. And that being said, that causes the so-called the probability to remain high for the 17th of September FOMC meeting as being compiled by the CME Fed Watch 2 based on price action from the Fed Funds futures market. So Fed Funds futures traders is now placing a high odds of 88.7%, round up 89%, that the Fed may cut by 25 basis points to bring the Fed Funds rate down on 17th of September to 4% to 4.25% from the current rate of 4.25% to 4.5%. And this probability continues to increase from a week ago. So a week ago was 82.4, now it jumped to 88.7. And if you look down the calendar with the future ahead dates, so on the now on the last meeting date of the year. Okay, so after 17th of September, you will be 29th of October. So at 29th October, the market is expecting a so-called 61% to stand pat after that 25 basis point potential cut in September next month, 61%. But right now, there's an increase of another potential cut coming in earlier in September to bring it down to 3.75% to 4%. So this has increased. Previously was not that high, about 20% or something like that. So now it jumped to 39%. And market is still assigning a higher odds of 76% chance that the second rate cut is more likely to come in on the last meeting of 2025, which is the 10th of December 2025 FOMC meeting, to bring the Fed funds rate down to 3.75% to 4%. And because of this dovish speech from Fed Williams yesterday, it also drive down the 2-year Treasury yield as well. So this 2-year Treasury yield is rather use it as a proxy to actually determine Federal Reserve monetary policy stance, because the 2-year Treasury yield is the most sensitive year to Fed monetary policy stances. So this 2-year Treasury yield continues to remain soft, and right now is actually testing a key support level at 3.55. All right, so the 3.55 is very important. So 3.55 managed to hold the US Treasury yield since March 2023 last year. So if we start to see a breakdown by this 2-year Treasury yield, it indicates that market participants are getting a high conviction that the Fed will kickstart a interest rate cut cycle again. So that also potentially reinforced this dollar weakness feedback look back into the FX market yesterday. All right. Now, another thing I want to share with you guys is more to the Asia market. So on the Asia market, yesterday the Hong Kong 33, or that's we call it our platform, the Hong Kong 33 CFD index, which represent the Hang Seng index, plummeted yesterday by close to, I think, 1% plus, and broke below our short-term pivotal support that we highlighted. So I'll touch on more on the technical outlook of the Hong Kong 33, which represent the Hang Seng index. So as we are speaking right now, the Hang Seng index continues to remain weak at negative 0.7%. The CSI 300 interestingly managed to recover because don't forget, Hong Kong and China market is very close. I mean, they are trading in a very direct correlation. Why? Because certain A shares is being listed on the Hong Kong Stock Exchange, and these A shares are major component stocks in the Hang Seng index, like for example, Tencent, like for example, NetEase is one of them. You have Tencent inside. You have Alibaba is part of it as well, and a couple of more. So, right. So the key thing, and also do not forget over here, is that the Hong Kong is also a gateway for foreign traders or investors to actually take a team play betting on the Chinese economic growth, the macro picture. All right, because we know that foreign funds, they tend to have some restriction entering into the mainland share market. So they tend to use Hong Kong stock market as a proxy to place their bets, betting on the macro health of the Chinese economy. All right. So now, enough said. So now the CSI 300 managed to inch up to 1%. So what causes the sell-off in the Hang Seng index yesterday was this fear about margin financing in the mainland share market hitting a rather erratic phase, a pace where potentially a fear of a 2015 bubble-like scenario coming back into play again. So what do I mean by that? So you look at this chart over here, right? This chart where I plotted, I hope that you guys could see my chart. Give us hopefully 1 second, 2 second, 3 second. I'm not sure why is this chart showing. Yeah, the chart is shown. Okay, just now there's a bit of lagging. All right, so this chart I'll share you guys is a very long-term chart since 2012. The pink, the pink line over here, the pink line is the China Stock Exchange Composite Index, and the light blue line is the margin debt to put as margin financing. That means, i.e., traders or investors using margin financing to purchase shares in the Shanghai Stock Exchange. All right, so this is the margin debt in SSE. So SSE in long form is Shanghai Stock Exchange. So this margin debt has been rising rather steeply since the start of this year. All right, in line with the price action on the Shanghai Stock Exchange Composite Index. And if you put it in a very long-term perspective, right, they have a very strong direct correlation. Okay, so the fuzzy over here right now, the scare was market look back to 2015 over here, where the margin debt rose rather steeply and causes a rather strong push up on the China Shanghai Stock Exchange Composite Index. Over here is bubbly light. So after the bubble burst, the gains almost erased up by 80%. All right, in the next 2 years. All right, in the next 2 years, the gains almost erased by 80% before hitting a bottom in 2019, before the COVID pandemic took shape in 2020. So what we could see over here is that market is now having a mirror look back, historical look back mentality, stating that this push up in margin debt in SSE, the Shanghai Stock Exchange, is mirroring bubbly light scenario in the Chinese economy, and that could create a bubble and a boom bust scenario on the China A shares market, and that created a negative feedback loop. And that also being reinforced yesterday, we start to see China financial institutions starts to curb margin financing. So yesterday there's this Shanghai-based Sinolink Securities, not a major big China's securities, a small one. He imposed margin financing for new client, increasing it to 100%. And also there is some domestic mutual fund houses that impose daily purchasing restriction on some portfolios. That means, i.e., mutual funds are like unit trusts in China. So even unit trusts are now so-called imposing daily purchasing restriction on some of their unit trusts or mutual funds. So that kind of created a negative scare or feedback loop in the China stock market yesterday, and eventually lead to that intraday sell-off on the Hang Seng indices. Okay, we talk about the Hang Seng index, the Hang Seng Tech shares, and as well as the HSCEI over here. So that is the key, what you call it, key events that has taken shape yesterday as well. And one more event I'll share with you is more pertaining to that European stock market, or the German DAX, or the German 30. So yesterday we have a kind of a tier 1 release from Germany, which is the business consumer confidence. All right, so consumer confidence in Germany actually plunged more than expected. So market is expecting a negative 22 print, all right, for the month of September. So this forward looking for next month, September. So instead it came in much more worse than expected. It came in at negative 23.6, and the previous print for the month of August was slightly revised as well downwards from negative 21.5 to negative 21.7. So that indicate a rather dim outlook of consumer confidence in Germany, and also causes the German DAX to actually broke below our lower neutrality limit as well. So yesterday I do share you guys, I flipped to a neutrality stance on the Germany 30 because of that not so rosy latest technical element, and also in light of that rising geopolitical risk premium in Eurozone due to that uncertainty in the political climate of the French economy, because the current French premier is calling for a confident vote, and the three opposition party may actually vote against his votes. May vote against him and potentially could oust him out as well. Okay, so that create a bit of political uncertainty in France, eventually lead to a negative feedback loop into Germany's stock market. And yesterday, the lackluster consumer confidence in Germany add on to this negative feedback loop. All right, so later I'll touch on the Germany 30 CFD index. What are the key levels to watch? All right, so now let us now proceed to the second segment of the daily dose very quickly. Before that, let me expand my screen. Okay, so let us start with the FX market first. Okay, give me 1 second. Hopefully the screen is, yeah, good. I think the screen is all right. Okay, so euro dollar. So euro dollar, yesterday we mentioned the pivotal support to watch will be at 115.90, 115.70. So indeed, the V-shaped recovery takes shape at the 115.90, 115.70 pivotal support that I highlighted to you guys yesterday. So this indeed is a pivotal support for the euro dollar to maintain its ongoing bullish biasness for the further recovery, at least in the intraday basis. So first resistance level to watch and surpass will be 116.70, which I highlighted yesterday. So above 116.70 potentially take us up to retest close to last Friday's swing high area at 117.30, which is also the important descending trendline resistance that kept previous recovery from not breaking up higher, which is the descending trend line that is still in play from the 52-week high that was printed previously on 1st of July 2025. So still maintain that bullish bias on the euro dollar. So unless we have a breakdown below 115.70, then this bullish bias slash recovery scenario will be invalidated for the euro dollar to see it floating downwards, extending its minor corrective decline further to expose the next near-term support level at 115.30, which is the golden ratio of the 61.8% Fibo retracement from the previous short-term minor up move from 1st of August to 13th of August, and the minor swing low area of 1st of August to 5th of August. So that's for the euro dollar. Next up, the sterling dollar. So the sterling dollar also managed to shape that V-shaped recovery right at the 20-day moving average over here. So still no change. The pivotal, there was a bit of whipsaw over here at the pivotal support yesterday. So right now the pivotal support now is at the rising 20-day moving average at 134.45. So still no change there, using the 134.45 pivotal support on the sterling dollar. be on the lookout for the first resistance at 135.45, which is fast approaching, which was last Friday minus swing high, and this 135.45 is also very close to this important descending trend line that has kept previous rebound in check since the so-called that 52-week high as well, which is 3.788 that is being printed on 1st of July. So a breakout above 135.45 potentially could increase the odds of a start of another bullish impulsive up move sequence on the sterling dollar in first step for the next near-term resistance to come in at 135.90/136.10 next. However, a price action breakdown below 134.45 again will see a choppy minor corrective up down decline unfolding, retesting 134 figure slash 133.70. So that's for the sterling dollar. Next up will be the Aussie dollar. So the Aussie dollar yesterday we flipped to a neutrality stance, neutral between 65.05 and this 64.70. Price actually indeed hit the lower neutrality limit at before the start of the US session, that is 7 p.m. Singapore time, before shaping that rebound and broke above the upper boundary during the middle part of the US session yesterday. So this will be a pullback support level to watch at 65.05 as price action now tested the next resistance at 65.20. So given yesterday bullish breakout above the so-called the upper limit of the neutrality range, we will flip to a bullish buyer stance on the Aussie dollar for today. So still bear in mind, if you look at the Aussie dollar chart on the daily time frame chart over here, it's still evolving in this expanding wedge configuration since 24th of April 2025 low. So being an expanding wedge configuration, volatility can suddenly increase because the upper and boundary expand, the upper limit and the lower boundary of this kind of sideways range expanded. So it's in a kind of it's trading in a sideways range, but this sideways range involves higher volatility. So that means, i.e., on the intraday basis, we may see vicious spike here and there. So given the nature of this expanding wedge sideways range configuration, higher volatility as it trade within this range. So on the near term basis, which is on the intraday basis, I do not want to tighten my short-term pivotal support level to be so tight at the 20-day moving average, which is now acting as a support as well at 64.90. So I'll put it down at the bottom of yesterday's neutrality range, which is 64.70/64.60, given the nature of how it is trading right now. It may actually see vicious swings due to the expanding wedge range configuration on the medium term basis that is still evolving. So we'll be using yesterday's neutrality range lower limit 64.70/64.60, which is yesterday's intraday low before that V-shaped rebound. So that will be my pivotal support for today. Flip to a bullish bias for it to float upwards towards the upper limit of that expanding wedge configuration. In near term, the next resistance level to watch after 64.20 will be after 65.20, pardon me, a bit of tongue twisting, will be 65.40, followed by 65.60, which is the minor swing high area of 13th of August and 14th of August. Only a bearish breakdown below 64.60 will invalidate today's bullish biasness to see another vicious slide downwards towards the lower limit of this expanding wedge range configuration, exposing the next near-term support level at 64.45. A breakdown below 64.45, potentially revisit last Thursday and last Friday swing low at 64.20 next. So that's for the Aussie dollar. Next up will be the dollar yen. So dollar yen also did a very vicious move. So yes, it has a kind of an intraday breakout above 148 figure. That's the short-term pivotal resistance. Then thereafter, momentum can't maintain and it plunges downwards again. So indicating that yesterday's move was a failure bullish breakout. So what we could see right now is now attempting to actually retest this 50-day moving average and also the minor swing low of 22nd of August and 14th of August at the 14670/40. So usually after this kind of vicious move on the intraday chart, I will tend to look at the higher time frame chart to give me some form of clarity in terms of the price action. So let's go to the daily chart of the dollar yen. So the daily chart of the dollar yen, what we could see over here is being congested right now. It's kind of a tight sideways range. And what interesting over here is that the 20-day moving average continues to slope downwards because it's sloping downwards, indicating also the lack of bullish momentum. All right, and what's interesting over here is that the daily RSI, after the negative reaction on last Thursday, 21st of August, continues to print a lower high after yesterday as well, lower high, right below this former parallel ascending trendline support, now turns into a pullback resistance, this dotted red line over here. So this, on the daily chart, it gives me some clarity that there is much more bearish element compared to bullish element. So with that, I could actually maintain my bearish bias on the intraday time frame, which is the hourly chart over here, using yesterday's high as my access, which is 148.18, 148.18. So 148 figure slash 148.18. But that will be my short-term pivotal support level. Maintain that bearish bias for it to retest 14670/40, which is very important. So a breakdown below 14670/70 will invoke a kind of a minor bearish breakdown scenario for it to float down towards the next near-term support level at 14585, which is the minor swing low of the minor swing low of 24th of July over here. Only a push up above 148.18 that would see another vicious squeeze up again to retest the last Friday swing high area before Fed Chair dovish speech at Jackson Hole, which is 148.75, which is now corresponding very closely to this downward sloping 200-day moving average. Right, so that's for the dollar yen. Now, very quickly, let's move our attention to the major stock indices, starting with the Hong Kong 33. All right, so the Hong Kong 33 yesterday broke down below our short-term pivotal support at 25,490, and it plunges all the way down. And what's interesting right now is now coming very close to the 50-day moving average and also the lower limit of this medium-term ascending channel that is still in play from 2nd of June 2025 low. And what we could see over here is that the hourly RSI now has starts to shape a kind of a bullish divergence. All right, a higher low and just exit from the oversold level. All right, whereas you see the price action is shaping similar low. All right, so this is also considered as a bullish divergence on the hourly RSI. So indicating that the downside momentum that was being seen on the Hong Kong 33, representing the Hang Seng Index yesterday and throughout the US session has starts to ease off over here. So with that, I'll be watching this level very closely, which is corresponding with two key technical elements, the rising 50-day moving average and as well as the medium-term ascending channel lower limit from 2nd of June 2025 low. That will be at 24,740, 24,740, and also coincide with the minor swing low of 6th of August and 12th of August over here. So using this level as my short-term pivotal support level for today, I will have a bullish bias for today for a potential recovery scenario to take shape, given that it's coming very close to this key inflection level. First resistance level to watch will be very close to the 20-day moving average, slightly higher. This is a very clear key graphical congestion area formally at 25,190. Above 25,190 potentially will see us taking the index higher to yesterday's former pivotal support level, now turns into a pullback resistance, which is pretty key. Why? Because after that clear breakdown of this 25,490, we see a rather steep intraday sell-off, all right, over here. However, if you see a price action breakdown below 24,740, so that will invalidate the so-called preferred recovery scenario that I have for today, to see price action plunging down much further towards 24,400, maximum 24,260, which is the close to the minor swing low area of 1st of August. Okay, the minor swing low area of 1st of August, pardon me, that is 24,260. All right, so now next up will be the Nikkei 225. So Nikkei 225, yesterday we have that bullish bias as well, and finally it managed to clear above our first resistance level at 42,000 42,520. So with this clearance of this 42,520 in the last 3 hours or so, we will tighten our pivotal support for today to bring it up in line with the rising 20-day moving average, and also very close to today's intraday low, which is 42,258 over here. So this will be 42,235. All right, so this will be my tightened pivotal support area for today. Let me put it in writing. 42,235, 42,235. All right. Okay, so let me extend it here so that you guys could see 42,235. Okay, 42,235, and this will be my next support level ready to watch. Okay, let me tidy it up. Oops. All right, so yes. Okay, in nutshell, clearance above the first resistance at 42,520 give us the conviction that we maybe starts to seeing a start of a new bullish minor impulsive upmove sequence for the Japan 225, representing the Nikkei 225 over here, and also the hourly RSI continues to shape a higher low. All right, and hasn't hit the overbought level yet at this juncture, indicating that bullish momentum condition still remains intact. So with that, I will tighten my short-term pivotal support level in line with the rising 20-day moving average, which is very close to today's intraday low at 42,258. Pivotal support tightened to 42,235. So maintain that bullish bias in the Japan 225. Next resistance level to watch will be the 43,060, where price action got rejected last Friday as well. And above 43,060 may expose the next intermediate resistance at 43,470. Only a bearish breakdown below 42,235 will negate today's bullish bias to see a choppy minor corrective decline sequence unfolding to retest the next near-term support level at 42,000/41,760 again. All right, so that's for the Japan 225. Next up will be the Germany 30 over here. So the Germany 30 yesterday kind of broke down. All right, our lower neutrality limit as well. So with that, it seems to be us to be consolidating in this kind of rather we call it a weak momentum condition on the Germany 30, and potentially it may float down towards the lower limit of this minor ascending channel that I drew from the low of 19th of June 2025 low over here. So for the Germany 30, I'll be having a bearish bias for today given the lackluster or weak price action that has unfolded in the last 3 sessions. So using yesterday's or I would say that yesterday's Asia session high, which is at 24,270. After hitting this close to this level, it got rejected. It has evoked that bearish price action throughout the European session. So there could be a very important psychological level to watch in terms of how the price action reacted in the last 2 sessions from Tuesday and Wednesday. All right, then thereafter you see that sell off in the European session yesterday. So using 24,270 as my short-term pivotal resistance level on the Germany 30, I'll flip to a bearish bias. All right, breakdown below 23,990 that it managed to find support during the start of the US session yesterday, 23,990. A breakdown below 23,990 may expose the next near-term support level next at 23,790. And this 23,790, if you do the Fibo retracement of that previous up move from 1st of August all the way up to the high of 15th of August, that also coincide very closely to the golden ratio of 61.8%. Only a bullish breakout above 24,270 will invalidate today's intraday bearish bias to see a recovery scenario unfolding, testing the stubborn resistance level that previously managed to keep the boost in check since 18th of August at 24,440. So only a clear breakout above 24,440 with an hourly close above it could increase the odds of a start of a new bullish impulsive upmove sequence for the Germany 30 to take it high up to for the next resistance to come in first step at 24,560, followed by 24,730. That's for the Germany 30. Next up will be the major stock indices, starting with the US Wall Street 30. So the US Wall Street 30 managed to shape a bounce right exactly at our intermediate support level that we highlighted yesterday at 45,455 over here during the start of the Asia session. All right, the start of the Asia session, it came down. Yeah, so that's 4 a.m. Singapore time. Then at the start of Asia, it bounces. So given that it hasn't cleared above the current all-time high area at 45,780, I do not want to tighten my pivotal support level to be so tight to 45,455. So still remains the same at 45,100. Maintain that bullish biasness unless we have a clear bullish breakout above 45,780 during the start of the European session. Then I will tighten my pivotal support to 45,455. So for now, levels still maintain the same. Maintain that bullish bias on the US Wall Street 30 that's representing the Dow Jones Industrial Average above 45,780. Take us up higher to the next resistance, which is a FIBO extension cluster level 46,060, 46,180. We also coincide with the upper limit of this minor ascending channel that is still intact or in place since 1st of August low. Next up very quickly will be the S&P 500. So the S&P 500 also managed to bounce off from our first support level at 6,450 level right after the release of NVIDIA. So given that it hasn't broken out above the all-time high area at 6,490, I'll be still hesitant to tighten my short-term pivotal support level to this bullish reaction at level at 6,450. So unless we have a bullish breakout at 6,490 thereafter, then I will tighten my pivotal support to 6,450. So for now, pivotal support still remains the same, which is at 6,410, which is the lower limit of this medium-term ascending channel from the low of May 2025 and the rising 20-day moving average. Maintain that bullish bias on the SPX 500 above 6,490. The next resistance level to watch will be 6,517, followed by 6,540, 6,555. So that is the FIBO extension cluster level. Only a bearish breakdown below 6,410 will invalidate today's bullish biasness on the SPX 500 to see another round of choppy minor corrective decline to retest last Wednesday and last Friday minor swing low area at 6,370, 6,350. Lastly will be the Nasdaq 100. So Nasdaq 100 also managed to shape that positive reaction of our first support level that I mentioned yesterday at 23,450. We also coincide with the pullback support of this former descending trendline resistance that was previously drawn from the all-time high of 13th of August that managed to survive. But however, it still can't break above our first resistance zone that we had yesterday, tested again. So it already tested for the third time. So today will be a very important test of it. So if we start to see a bullish breakout after the previous third rejection, it will actually potentially signify the start of a new bullish impulsive up move sequence. So watching very closely the 23,580, 23,660 level. So if we have a clear bullish breakout thereafter today, I will tighten my pivotal support to 23,450. So for now, the pivotal support remains the same at 23,308. Maintain that bullish bias on the Nasdaq 100. After 23,660, the next resistance level to watch for sure will be the current all-time high area at 23,930. However, a bearish breakdown below 23,308 will invalidate today's bullish bias to see a choppy corrective decline sequence, retesting the medium-term pivotal support area here. In first step will be 23,050, which is the rising 50-day moving average. Below it will be the medium-term pivotal support zone at 23,960, at 22,960, pardon me, 22,945, which is the former upper boundary of the long-term circular ascending channel that was taken out previously on 4th of August, now turns into a critical pullback support to watch. All right, so now let us proceed to the commodities asset class very quickly. It will be gold XAU/USD. So for gold XAU/USD, yesterday we maintained our bullish bias. Bullish bias hit our resistance at 3,402, very close. So intraday high in today's Asia session will be 3,399. Give or take is very close to 3,402. And what's interesting is it has started to shape a bearish divergence as we are speaking right now, printed a lower high. So that being said, gold is still trapped in a medium-term range configuration since the all-time high of 22nd 2nd of April, there could be a risk of gold XAU/USD today, given that bearish divergence on the hourly RSI to do a mean reversion decline, a minor one, back to retest this rising 20-day moving average. So with that, I will flip to a bearish buyer stance for today for gold for this potential minor mean reversion decline to take shape, using 3,402 as my short-term pivotal resistance level. First support level to watch will be 3,363, followed by yesterday pivotal support zone at 3,352/3,347. However, a bullish breakout above 3,402 will invalidate today's mean reversion decline scenario to see a squeeze up to retest its range resistance, which is the 7th of May, 17th of June, 23rd of July swing high area at 3,432, 3,435. All right, so that will be gold XAU/USD. Lastly will be the West Texas crude oil over here. So the West Texas crude oil, yesterday we have a bearish bias, if you recall, right below the 20-day moving average, which were yesterday West Texas oil, pardon me. Yesterday West Texas oil rejected again at this downward sloping 20-day moving average, all right, before trading lower in the middle part of the US session yesterday. So with that, no change. Price action also the rejection also rejected very closely to our pivotal resistance. So this is indeed still a pivotal resistance to watch for West Texas oil, which is the 65 figure level. So still using 65 as my short-term pivotal resistance level. Maintain that bearish bias on West Texas oil. First support level to watch will be 63.30, then followed by the crucial support level at 62.50, where it managed to survive ex-post risk event, which is the meetup between Putin and Trump previously last 1.5 weeks ago. However, a bullish breakout above 65 figure short-term pivotal resistance will invalidate today's bearish bias on West Texas oil to see a squeeze up to retest 65.60. A breakout above 65.60 will see a more pronounced corrective rebound scenario unfolding to expose the next near-term resistance level at 66.90, which is the minor swing high of 6th of August and very close to the downward sloping 50-day moving average. So with that, let's sum up today's intraday technical outlook on all the broad-based cross-asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So today will be Thursday. So Thursday, at the start of the European session will be rather a quiet session. Then before the 1 hour before the start of the US session, we have GDP growth rate, Q2 GDP growth rate for US, but this will be the second estimate. So you know that there's various estimate for Q2 GDP reading in US. So given that this is a second estimate, it may not have an impactful reading or impactful impact on the relevant respective instrument, which is the major US dollar pairs and as well as the major US stock indices. So that's 8:30 p.m. Singapore time over here. Then thereafter will be a rather quiet US session. So only we have a Federal Reserve official speaking before the start of daily dose tomorrow at 6 a.m. Singapore time will be Fed Waller speech. And also before the start of our daily dose, we have several key Japanese tier 1 data to take note of before that could impact the dollar yen. The yen crosses and the Nikkei 225 will be at 7:30 a.m. Tokyo core CPI data and Tokyo core CPI data, and followed by 7:50 a.m. we have Japanese retail sales, all right, year-on-year sales, all right, and as well as industrial production at 7:50 a.m. Singapore time tomorrow. So with that, that sum up today's daily dose of market insight. So today will be slightly longer. Why? Because I need to cover more things, especially NVIDIA post-earnings impact on their share price action, and as well what is going on in the weakness on the Hong Kong stock market yesterday. All right, so with that, that sum up today's daily dose of market insight. I'm Kelvin here signing off. I wish you a great day ahead, and we shall speak again tomorrow. Thank you.